Get the latest on what's going on this earnings season, meets, beats, and more in Zacks Earnings Scorecard.
We're going to see how a couple of home improvement stocks measure up this earnings season with Eric Dutram. Eric is the editor of Zacks Surprise Trader. You've got the score on Home Depot and Lowe's.
Yeah, and both these companies really in focus thanks to the surging housing market as of late. And with rising housing prices, everyone wants to work on their homes and get those prices even higher. So these companies have been doing relatively well, and hey, they're relatively immune from that whole Amazon trend of stealing a lot of share from the other major retailers out there. So this is a popular choice for a lot of investors. Let's take a look at Home Depot first. They actually report on the 16th before the bell.
Okay.
As we can see, the company has a great history when it comes to beating earnings estimates. Hasn't missed in this whole chart right here. In the last quarter, though, it did beat, but then shares actually fell a little bit after the report thanks to some weak numbers. But as we can see, earnings estimates have a nice trend still. We can see some rising numbers coming into this report. It does have a Zacks rank number 3, and that's actually just moving it out of hold territory. So, was just a sell, but we've seen slightly better numbers, a positive earnings ESP. So some decent metrics for Home Depot going into this report, and given its impressive history, it's hard to really bet against Home Depot when it reports its next earnings.
So is Home Depot still considered the barometer for the housing market on some level?
I think so. I mean, they're just so massive. They're everywhere, and as we've seen, they've really been doing well here over the last couple of years, and it's really tracked the overall housing market as well.
Mm-hmm. Okay, and what's going on with Lowe's?
Yeah, Lowe's kind of the younger brother, I guess, to Home Depot in this home improvement space. This company also has a pretty solid track record when it comes to beating earnings estimates. Not quite as good as what we saw with Home Depot, though. If we look to the chart right here, we can see exactly what I'm talking about. The company has beaten in each of the last 3 reports, but it did have 2 misses in a row right before that. The company does have a pretty solid track record when it comes to raising the consensus here over the last couple of weeks, and it does have a positive earnings ESP of about 2.1%. So a little bit better metrics on the earnings ESP front. It does have a Zacks rank number 2, so it's a buy, and an A for its VGM score. So this company could be a little more impressive when it reports on the 17th before the bell. So both look like they're going to be decent, but Lowe's might be a better bet again this quarter for investors.
Well, Lowe's kind of focuses their attention more on the appliance end of the home improvement market, at least from what I can tell.
Okay, yeah, I mean, I think they both have appliances, but I think the big thing is Lowe's has a lot more growth opportunities because they're not quite as big as Home Depot. So I think that's really what investors are looking for mostly in this corner of the market.
Okay, sounds good. Do you maybe own either of them?
I do not.
Okay. Check out more earnings information during this second quarter earnings reporting season and even after on our website, Zacks.com. It's all there for you to link to right off the homepage. With Eric, I'm Terry Ruffalo.